Good day, traders. How are you all doing? All right, so here comes the video on 13.5 exponential moving average trading strategy. All right, so in this case, I'll just show you my 13 is this green, okay, this one. Then my 5 is this orange. I hope I'm not colorblind. That looks like orange. That actually is orange. All right, so I'll show you the settings before we go deeper. You come here, length 5, source close, okay? Then you just click on OK, as if you're on a laptop. If you're on your phone, also make sure that the part that talks about the length, you put 13, then the source, you just put close, right? Then you click on OK. Put colors that you want or use these same colors, anything goes, all right? Okay, so we begin at 4 hours because we just want to know what is going on, okay? Of which currently we have an upward cross, okay? Our orange has crossed our green, so our 5 has crossed our 13 to face upwards, which is telling us that we are buying. I am using Boom 500 currently, okay, to show this one. So then let's go down into our 1 hour time frame and see what's going on there. In our 1 hour time frame, as we can see, we are going up. All right. So what happened here initially was this. The market first had an upward cross here on a 1 hour time frame. And after that, we had an upward move, a short one. Then we got into a consolidation. Then here, within this consolidation here, we had an upward cross, which was showing us that there's a buy that is coming, and the market did buy. So if you go down into a lower time frame, you'll find that there was actually an entry here. So let me mark these areas. I'll mark with this so that when we go down into our lower time frame, I can show you how you're going to find your entries, okay? So that's area number 1. Let's deal with area number 2 and see. Area number, okay, I didn't mark that one properly. Then remember, we want to work with the upward cross. So this one, we don't care about, okay? Because our higher time frame has an upward cross. So until we see a change of character to the downside, we are not concerned. There goes another one here. You'll see how it becomes clearer and clearer in the lower time frames concerning entries. Okay, and then this part as well. Let's just mark it. All right, down to our entry time frame, which is our 15 minutes. There is no running away from candlestick patterns. You cannot run away, even if you are using indicators. You need to know what a bearish engulf is, what a tweezer is, what a hammer is, what follows the hammer, because in most cases the candles are the ones that tell us where to enter and when to enter. All right, so this was on 1 hour, right? Meaning that when you came down here, you would find that already the has been across here earlier on. Okay, so this green candle here that I'm highlighting with my cursor would have been our entry point here. When the market comes here like this, here, this candle, so I want to mark this level as our entry. Okay, this one would have been our entry. I hope this line is straight, looks straight to me. Okay, so we say this would have been our 15-minute entry. Okay, can I remove the rectangle? Because we know that it's from the higher time frame. Then our 15-minute take profit would have been here. I would have used, I like using these highs, but sometimes I like using the candle body, especially the previous candle. It's a safer, like here, I like using this one because it's a safer take profit. Sometimes you don't really even get there, so make sure that you know. So this is our 15-minute take profit. Okay, so that means you would have entered from here and rode all the way up to there. That's if that one was a buy. Well, it actually was a buy because we are going up. All right. And then for this area here, the reason why we need 15-minute time frame, check on the higher time frame, we had an upward cross, right? But what is happening on the lower time frame, we are seeing a consolidation where there's an upward cross, suddenly there's a downward cross, suddenly there's an upward cross, suddenly a downward cross. So that's why we need to come down into the lower zone. Okay, so where would we have taken entry? We would have taken our entry somewhere here for those that wanted to, but I wouldn't have entered here. I would have probably waited for this zone here to see what is happening. I would have entered after. You see this rejection candle and then this bullish candle. Then I have a bullish hammer. Looks like a bullish hammer to me. A bullish hammer here. Can I remove the rectangle, please? Okay, delete this one here. I would have entered here because these candles are telling us that the market is being pushed to go up. So this one was going to be my entry. As soon as this candle closed above the 5 EMA, I would have taken a buy from there. Buy. That's how you find entries. So those that have been asking about entries, here I'm actually showing you, you just put your buy there, okay? And then for your take profit, you'd have to come back. You'd have to come somewhere here and see what's happening on the left-hand side, okay? What is happening on the left-hand side? We have this area here. I would have taken a safer take profit of this level. So what you do, remember our support and our resistance zones and our flip zones, make sure that you also know them. So you can use them with these things to say, okay, where's our previous high? Where's our previous low? So if you go up into a higher time frame, you'll find that on the left hand side, like here, there's actually this level because a resistance can also be defined as a red candle that comes after a green candle. That's a type of resistance as well. So now, because of that, I would say I want my green candle body like that. Okay, this one. So from here, my take profit, let me take which one? This one. Let me take this one. I would have wrote this today. All right. That would have been my first take profit. And as soon as I saw this, rather by the time that it hits price here, I close before anything else happens. So you secure profit and you are out. All right. And then let's see if I can find a sell example. Let's go back. Let me remove these things. Remove 7 drawings. Let's see if I can find a sell in the same pair. I need to go and mark where there was a sell cross. Remember, we don't want to work against our higher time frame. I'll use this one here. I'll just use from there. Or rather, let me make my life easier. I'll do this. Right. So my downward cross started right there. So when we go into lower time frame, we're going to start checking if we would have found any trades down there. Let's just take it up to where? Up to here. Okay, up to there. So we want to see what was happening in the lower time frame here. Okay, clearly there's a downtrend here. Where do we go to? Let's go to our 15-minute time frame for our entries. Where's my other line? Okay, we're starting here. All right, so because already we have our higher time frame where we have our cross going down, right? Here already it has happened before, all right? That means that we just wait for a reversal which has come up to here. And we can see that here we got a bearish candle to close below both 13 and 5. So it means we can enter our sell from here. We take our sell from here. That's our sell entry. And then, okay, trying to make this as straight as I possibly can. And then as we move down, right, we are moving, we are moving, we are moving, we are moving. The moment that we see a very, okay, our first exit signal is when we see a bullish candle coming to close above our 5 here, we take profit. Okay, so we would have rode all the way down here, and then now because of this bullish candle closing above here, we know that there's some form of pullback that will happen before the market continues going down, so we can secure our profit. So we can take our profit over here and the market closes here. Okay, so this is our sell entry on 15 minutes. Then this is our take profit right there. Once we see this, we are out. And then we can wait for the next entry, which happens, we reverse, we are having a reversal, we see this one, then this one already told us no, 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 it is not safe, because the moment that this one closed, if you even tried to enter a sell here, you couldn't have, because from the time, okay, you actually could have. So you would have been stopped out here, okay, of which your stop loss is supposed to be above this bearish candle, the one that I'm highlighting there. Okay, so you would have waited. Then again, the market is trying um, to go down here. You wouldn't have entered here because clearly there's something that's happening. So you would have waited for market to first come and tap into this gap and actually give you a solid bearish reversal. Okay, so in this case we don't yet have a solid bearish reversal here, because this candle here, our candle 1 2 3, the candle afterwards that was supposed to give us confirmation has not continued being a red candle. So we don't enter, we wait. While we waited, the market continued going up, going up. Then this red candle here, it didn't close below our 13 as well. So we don't enter. Okay. So with 13 and 5, if you are using it on lower time frames, you are safer waiting for the candle that closes above or below. If you want to buy, you want a candle that will close above both. But if you want to sell, you want a candle that will close below both, like open above and close below both. Okay, like this one. This one is a perfect entry. Then you would have entered there, and then you ride down. Your first TP is this one. Okay, so you can keep on doing that, then you wait again and wait for clean crosses. It is not every trade that you will catch, okay, but you will still catch trades. Then for those that like scalping, maybe let's see, you can begin from your 15-minute time frame. Let's just see what happened here on 5 minutes. I hope I still have time on this. Let me take this cross here, okay, for my 5 minute, because sometimes you don't actually want to be in here for long. You just want to make your money and go because you are busy, or you've got things to do, or you just don't like holding trades for long. You want to make your money fast and then exit. That's also very possible. So depending on the strategy that you use, right, we go down into 5 minutes. If you wanted to enter on 5 minutes, you would have entered. Remember, this is where our cross is on 15 minutes, right? So you would have been late for this one. You would have missed this one because here there's no entry actually. I wouldn't enter because this one is boom. This is ticks versus spikes. So I would wait for here, for this part here, and I will tell you why. Or better yet, I would wait for this part. But the problem is this part right here, my first TP is very close by because my first TP would have to be here. So I would first wait for the market to go a bit higher and higher and higher before I can actually do something. So I would wait for it to first go up here. And then when I see this cross here, I know that, okay, something is about to happen. But remember, my cross here has been validated, so I first wait. And then once I see this cross happening here, and then a bearish candle following, I enter my sell from here.